All right, bull runners, welcome back to the channel. So we have a lot to cover with you guys in this video of what's happening in the crypto markets for XRP, some other top projects, Internet Computer rallying over 96%, being the top performer over the past 7 days. We're going to get into the price chart, what's happening compared to other projects. We're talking about Avalanche, XRP, Ripple partnership with MasterCard. Is XRP on its way to 70 cents or even higher? What's happening with the SEC case? The denial of a Bitcoin ETF could result in one of the biggest rug pulls. Ripple's case no longer mattering for XRP holders, among other big news happening in the markets right now that you guys aren't going to want to miss. So the long-awaited U.S. recession finally arrive in 2024 along the same time with the spot Bitcoin ETF experts are saying. So we're going to uncover if that's true, if it's not true, and what you can do to prepare. So hope you guys are having a blessed Tuesday afternoon or evening, wherever you're watching this video from in the world. Comment 777 if you're feeling blessed, if you're feeling bullish, if you're going to become the first millionaire in your family tree. You know what to do. Grab the like button, take your putter, tap it in, sink the putt. We're doing it for grandma. We're beating the SEC, and we're buying our house back with XRP. Let's run it. All right, bull runner. So let's dive right in. The first project that we're going to get into is Internet Computer, sitting at $9.40. We were talking about this project all the way back at like $3, $4, $5. Talking about this potential breakout forming with, you see a descending resistance right here. A breakout. If we broke through this descending resistance, which we did, and we saw this massive spring up to almost $12, pretty much $12, 328% rally. So what's going to happen next for Internet Computer? Well, looking at the RSI, we're sitting at 75 on the RSI in overbought territory right here. Now, again, guys, this isn't financial advice. Don't buy, don't sell anything we talk about on our channel. This is all educational purposes only. And if I give you guys any predictions, it doesn't necessarily mean that it's going to happen. This is just my take on the markets, and I could be 100% wrong. And by you watching this video and liking videos like this, when I give you technical analysis and fundamental analysis on different projects, you have to be completely okay with everything going to zero. All right. So by liking this video, you're okay with everything going to zero. But I share with you what I feel is going to happen and why I'm bullish or why I'm bearish in certain moments. And so right now, ICP is sitting at $9.40 in this zone of resistance right here. It broke a little bit above it with this rally, kind of in the middle territory. But I talked about retesting this range right here back from August of 2022, February 2023, and April of 2023. Now, it broke right through these levels, and it's currently consolidating at this level right here within the $8 to $9.80 range. The next stop for ICP before a much deeper correction, if we push higher with Bitcoin leading into the ETF potential approvals by January 5th through January 10th, ICP's next stop would be anywhere between $15 upwards of 17, potentially upwards of $23 would be the stop. Now, I do believe that would potentially be the peak for wave number one in the Elliott wave theory, because as you guys know, in a cryptocurrency 4-year market cycle theory based on Bitcoin's 4-year market cycle and the Bitcoin halving, we have 1 year from top to bottom and then roughly 3 years from bottom to top. Now, during the 3 years from bottom to top, we see Elliott waves form, where we see wave number one is the start of the bull run. Corrective wave number two is the first major correction that takes place. Wave number three is the most impulsive, that brings retail money into the markets. Google trends start to go crazy with search volume, where people are researching on Google the best cryptos to buy now, the best altcoins to buy now, and everyone starts coming in the market. Corrective wave number four is the last corrective wave to be able to back up the truck for the dip before the final blow off top for the markets for the final stage of the third year, before we go into an ABC corrective wave on the other side for the 1 year bear market. Now, where will wave number 5 top out at? We'll get into that on this channel as we get closer to it. We got a lot of time, by 2025. So you got a couple years here to prepare. And right now, you were wondering, is it the right time to buy? Should you buy right now? Now, am I buying ICP right now? No, I'm not. Well, why is that? Does that mean it's a bad project? No, absolutely not. Well, I was accumulating, certain positions in ICP right around $3 or $4. I was buying before the breakout. When the project breaks out, buying right now, it's a little bit riskier, right? So yes, we could push higher in the short term, $15. So if we were to go from where we are right now, $9, upwards of 15, $16, that's another 70%. So sure, you could catch another 70%. But when we see wave number one top out, wherever that tops out at, it could be in right now. It could push a little bit higher. Nobody knows. So for me to tell you exactly where that's going to be, I would just be guessing there, right? Wave number two is when the ETF hype would die down and the potential recession would be in for the economy based on macro market conditions that we're going to discuss. And that could last 3 months. It could last 6 months through 2024. We'll see. Wave number one, if depending on where wave number one tops out at, we'll adjust, and I'll let you guys know when I would be re-entering the markets. But I'm not accumulating more. I'll talk about if I'm going to be selling or hedging anything in any positions if you guys subscribe to the channel. But right now, I'm not buying. It's at 75 on the RSI. It's a little bit high. We're in this rising wedge right here. I do think we could stay here for a little bit longer and kind of bobble around within this range between $9 and $17, push a little bit higher. But then corrective wave number two could be coming in 2024. And so there are other projects that I do believe have higher upside in the short term. But when we look at something like Render, right? So I look at the chart for Internet Computer over the past 7 days, and we topped out at about almost $12, $11 something cents, depending on what exchange you're looking on, almost $12. Now, when I look at Render's chart, I saw something similar happen to Render back here when Render went from 43 cents RNDR to $2.13. And then that was on February 7th. It took until, April. So 2 months later before it passed that. And then it kind of consolidated sideways until just recently, November. So this consolidation period lasts a long period of time. So what happens here in these markets is people get excited and they see a project like Render pumping, or they see a project like Internet Computer pumping. And so they're buying right here at $11.40 off of FOMO because everyone's jumping in when we were talking about it all the way down here at $3, $4, $5 before the breakout. And when they buy right here, they're now having to sit and hold for a week, 2 weeks, a month, sometimes 3 months, sometimes 6 months for some of these projects. And then what happens here is then they see another project rally, and whether it be Avalanche or Solana, and then they sell at a loss. They move it into a project that's seeing a pump at the peak, and then they now have to hold for another month, 2 months, 3 months. And so that's why 99% of people lose money in these markets, because they're buying these projects that are at massive rallies, and they're not buying the projects that have yet to see their rally. So when we look at ICP compared to Render, we saw Render break out from 37 cents in rally out of this descending resistance right here, 460%. Very similar to ICP, this first rally out of this descending resistance is 328%. And so then what we saw there is a 58% correction for Render. So depending on where this rally tops out at for ICP, if we were to see, a 47, 50% correction, it'd bring it down to $5.40, which is this descending resistance right here that would act as support, because it was resistance since February of 2023. It retested again on April 2023, and then just broke right through it recently in this month, December. And so could we come back down to retest it as support and then bounce off of it? Absolutely. That's a very likely scenario, similar to, what happened with Render on this 58% sell-off. But then we saw Render bounce from that and rally another 228% to retest the resistance from March of 2022, and then see a sell-off of another 57%, consolidate sideways for an extended period of time before passing that again, which took 172 days, rallied up another 288%. So Render is almost done with wave number one in the first phase of this 3-year bull market cycle. So if Render pushes a little bit higher for wave number one, I do think we would be starting a much longer, deeper corrective wave for wave number two, and then working our way out of here going into 2024, 2025 for wave number three. So where Render tops out at will depend on if Bitcoin continues higher, leading into ETF approvals. But right now, how far are we off from that correction? It's a lot riskier to be getting into the markets right now, compared to 6 months ago, compared to August, or even back in January earlier this year, almost 12 months ago. And so during the 3-year cycle, we have months of bullish price action and then months of bearish price action. And then when we see corrective wave number 2 bottoming out, that's the next best time to enter the markets, right? So there's 3 high quality periods to enter the markets in a bull run. Period number 1 is the bear market bottom, the lows, when everyone is out of the markets. 99% of people don't care. Google trends are down. And contrary to popular belief, people are like, oh, crypto's over, crypto's done. That's the best time. It's the opposite, right? Why do the rich get richer? 1% get richer, 99% give money to the rich because they're impatient, they get out, they think it's over. When the wealthy are coming in, they're like, now's the best time to enter. So period number 1 is right here, obviously at the bottom, right? To know where the bottom is, we look at different indicators. We were talking about that months and months and months ago in January is when I bought Bitcoin at $16,700. That was the best entry point. That was when I was entering the largest portion of my positions into the market. And the second best time is wave number 2, corrective wave number 2. This is the second best time. Now, where this will be, we're going to adjust every single day, and I'll be letting you guys know. You'll be seeing technical analysis. So make sure you like this video, subscribe to the channel. I'll let you know when wave number 2 I feel is in. This is the second best time. And then we ride it up for wave number 3, the most impulsive wave. And then the last and final time to enter the markets is corrective wave number 4 before the blow off top for wave number 5. And then what we see happen when we see the final blow off top, the final peak for the markets, is we see a much deeper A, B, C corrective wave for the bottom. Then we start the cycle all again, where the best time to enter the markets on the next bear market is at the bottom, right? The next best time is corrective wave number 2. Then the final time is corrective wave number 4 before the blow off top. And then the next bull run top would maybe be 2030, right? So depending on what these charts are going to look like on a much macro scale, something like this. Now, the time frames, right? Don't look at the time frames on where I drew these Elliott waves right here, or where the prices is at the time. It's just an example purpose only, right? But Elliott waves are what you want to be looking for. And so we're almost done with wave number 1. We're going into corrective wave number 2 here soon, and that's what could lead into a recession talks and something happening in the economy, some black swan event. Who knows what that is? Looking at Avalanche, Avalanche is up to $40 right now. So Avalanche is in the midst of wave number 1. Now, where wave number 1 will peak at could be anywhere $52 upwards of the high, $144. I don't think it'll go up to the high. I don't think we're breaking the high this year or for wave number 1. I think we're going to peak out within this range. As you can see, the resistance, that was support in January of 2022. It was support in October of 2021. Then we fell off the shelf during the bear market. We saw this massive decline, bearish price action, descending resistance. We broke the resistance, quick consolidation, broke it again, quick consolidation. We could be pushing a little bit higher. And then we'll be talking about wave number 2 and where wave number 2 will be coming back down to enter the markets over the next few weeks and the next few months for you guys. So this would be wave number 2 is the second best time to enter the market. So right now, I'm just sitting back, I'm relaxing, I'm looking to see where wave number 1 will be, and then I'll probably be hedging out some of my portfolio. Now, am I buying Avalanche right now? No. Am I buying Render right now? No. Am I buying ICP right now? No. What project am I looking at accumulating right now? XRP. XRP is looking great because we have been consolidating slash, this little bit of an uptrend. We're up, 100%. So people say XRP has been underperforming. Yes, that's true if you're comparing it to other crypto projects, but it's been overperforming compared to other industries. If we're comparing to like silver or the stock market and a lot of these other companies, XRP is doing very well. But if you're looking at Solana or Avalanche or, anything else, basically, all these other projects are outperforming XRP. So it's been about 555-ish days that XRP has been in this uptrend. And so the next move for XRP, because XRP has been underperforming for wave number 1, I think XRP is the best to be looking at right now. We see this descending resistance on the macro, on the daily right here. And I think XRP could make a move very, 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 very impulsive, very, very quick, anywhere between 70 cents, $1.30. Then we'll talk about corrective wave number 2. But because we've just been seeing this slow grinding uptrend, it's been building momentum, building pressure. I talked about Chainlink in another video, how Chainlink was seeing something similar happen, even though Chainlink was trading to the downside. the range that it was building momentum within was about 500 plus days as well too. And so XRP on the bottom of the screen, you can see the open interest as well too. This basically tracks and shows you how much leverage is in the markets of people, longing the markets or shorting the markets at any given period. And when you see this white line right here go up, leverage is increasing, and we usually see a correction come, a sell-off come. So as you can see right here, back in February, back in October of 2022, February of 2023, March of 2023, July of 2023, and November of 2023, these periods are right here are when XRP has seen a rally followed by a sell-off to the downside, right? Post-lawsuit decision, XRP rallied up. The open interest was upwards of $500 million in leverage. Sell-off, boom, rally up, 73 cents. Open interest goes upwards of $600 million. Sell-off. Now, what we're also looking here on this chart on the bottom of the screen is this upward trending support right here in purple, very similar to the upward trending support on the price chart for XRP. So if XRP sees a sell-off with the rest of the markets and all these other projects are, slowly draining liquidity out of the markets, going back into Tether for a little bit until we figure out what's happening with the ETF after Christmas. People are just relaxing right now, maybe hedging some profits for their Christmas gifts because, everyone that doesn't have money right now, need money for Christmas gifts. They're probably selling off some projects. And then most people are just going to be holding right now, waiting for wave number 1 to be in. So what I'm expecting to happen for XRP, if we see XRP continue to sell off to the downside, I would expect a bounce off of this upward trending support line in purple, anywhere between 53 to 55 cents right here. Hold it as support and some type of impulsive move to take place. In the most likely case scenario, in an impulsive move, would be a break to the upside with Bitcoin ETF approval, a bounce off of this open interest support to the upside because we're at 354 in interest. We're seeing it sell off to the downside. We're seeing liquidity flow out of the market, leverage getting wiped off of the table, and leverage would come back onto the table for another spring to the upside for wave number 1. Depending on where wave number 1 tops out at with the Bitcoin ETF's approval, we'll see leverage somewhere in the likes of $500 million, upwards of $700 million, maybe all the way up to $1 billion. I would expect the open interest to be up here and then to see another wipe of leverage off of the table for corrective wave number 2. This is what I would expect for XRP. So in the short term, yeah, whatever, 70 cents to $1.30, not the most exciting thing, not life-changing wealth. But in the long term, I'm expecting XRP's wave number 3 to be the most impulsive wave to blow through the all-time high, and that leading into 2024, 2025. So XRP is a long-term hold for me, but in the short term, I do think XRP is looking a lot more attractive, a lot more zesty in terms of a entry position for me personally, because wave number 1, could be a 2X or up to $1.20, $1.30, even upwards of 70 cents. It's nice little trade right here for XRP on the monthly as well too. On the monthly charts, when we look at the MACD, moving average convergence divergence, you can see a shift here. You can also see a cross right here in the MACD and the signal line. The blue line, which is the MACD line, is crossing above the signal line in orange right here, and the momentum has shifted. And we're just kind of sitting right here, very similar to what happened back in October to March of 2021. You saw a cross take place in the momentum shift. XRP just kind of sat for a little bit post lawsuit. We were hovering right here, and then boom, we broke out of here, rally up. We saw the peak of the bull run, and then the bear market took place. Then we saw a cross right here where the MACD crossed below the signal line. So what this means is when the MACD line crosses above the signal line, we're seeing momentum come into the markets. Bulls are coming back. Bears are losing steam, and liquidity is flowing into XRP. When we see the MACD line in blue cross below the signal line up here at the bottom of the screen that you can see, we're seeing money flow out of the markets. We're seeing the bears gain control, the bulls lose momentum, and we see bearish price action. So what are we seeing right now? What are we seeing? And then let's also look at the past. Let's go back to June of 2018 to show you guys this. XRP peaked out above $3. What do we see right here? Bull market was over. The top was in. Massive wick take place. And so bears took over. Bear market. On the MACD, we saw the MACD line cross below the signal line, blue line crossing below yellow. We saw this momentum shift from these green bars right here to these red bars right here, and we were in a bear market. Same thing happened for 2021. Green bars right here, red bars right here, bear market, MACD crossing below the signal. What happened recently in June of 2023? This was the SEC lost. XRP, not a security on the secondary markets. And so we saw a cross, MACD crossing above the signal line. Bullish indicator right here. Massive bullish indicator right here. What are we also seeing right now? We're seeing it just barely breach above zero right now. We're not anywhere close to 0.15 that we were at, at the peak of, or on this turnaround right here. The peak of the bull run, the MACD line was at 0.135. At the last bull run, the peak, the MACD was at 0.155. Then we see this like blow off top, it roll around. We're not even above, we're barely above zero with the blue line. So what could happen next? Again, I could be completely wrong here, but if the past is any indicator of what could happen in the future, we could see the MACD line come up here. We could see the signal line come up here. That signal line in yellow or orange would stay below the MACD line in blue throughout the bull run. And then we see the markets have a blow off top, the signal line turn around, the MACD line turn around, the signal line turn around as well too. Then we would see a cross take place somewhere up here. And then we would see the top in for XRP, at the end of the bull run. The top would come in before the MACD line crosses below the signal line, most likely, right? Because that's what happened the past few bull runs. Top came in on the price chart. XRP was above $3. Then shortly after that, how much longer did it take after the top before we saw a cross? It took 151 days. Okay. Now looking at the last peak of the bull run, XRP didn't pass its all-time high. So it really missed the last bull run when Bitcoin passed its previous all-time high of 20K and went up upwards of almost 70K. How much longer for the top was in of 2021? April of 2021, before the MACD crossed below the signal, 275 days. So 275 days for the last bear market. The bear market before then was 151 days. So when the top comes in and we start to see the MACD turn around, we'll let you guys know, because right now we're seeing more momentum in favor of the bulls, specifically with the news that's been taking place and lack of price action on the chart. Eventually the chart will catch up to the fundamentals. So because this news is happening for XRP, nobody's paying attention to this. The price action on the chart is not showing this happening. Ripple partnering with MasterCard, right? MasterCard is right up there with Visa. MasterCard recently announced their partnership with Ripple, and they've chosen Ripple as a new partner in their efforts to explore and capture the expanding market for central banking digital currencies. So Ripple and MasterCard, they're collaborating to introduce cryptocurrency debit cards. These cards are designed to allow customers to make purchases at retail establishments using XRP, Ripple's native currency. So do you guys think that MasterCard knows something that nobody else knows, and they're planning for this? What are they planning for? A bull run for XRP and for retail to be excited to use their XRP to spend in stores. Now, would you be using that? Would you be spending your XRP? For me personally, no. I would be using fiat currency. I'd be spending my fiat currency because cash is losing value, and I would be either hedging my XRP, holding for wave number 5 long term, and then looking at other projects while I'm spending my fiat currency. And so that's big news, guys. The SEC's denial of Bitcoin ETF could result in one of the biggest rug pulls. Would that happen? Would the SEC deny the ETF? What would cause them to do that? Well, the crypto community, everyone's holding their breath right now, waiting for January. And according to analyst Nate Garashi, if the ETF is not approved, it might be one of the biggest rug pulls in crypto history. However, he's still believing that the chance of the product being greenlit by the SEC, is close to 100%. Bloomberg is saying over 90%. And this impending decision, which is anticipated to take place next month, is going to mark the turning point in the integration of crypto into traditional finance. And per Bloomberg Intelligence's estimations, the spot Bitcoin ETF market has the potential to become a $100 billion behemoth, guys. So when you look at Ripple, a company has some of the largest partnerships in the space with a Bitcoin ETF, with institutional money coming in, where would that money also be diversified into? XRP has legal clarity. So Ripple's case with the SEC no longer matters for XRP holders, and experts are claiming. And so one of the main objects of interest for XRP, the XRP army and XRP enthusiasts, is the XRP ledger and hundreds of exciting apps and ideas being built on it because XRP has already been cleared of the allegation of being a security. And the XRP Ledger's ecosystem is advancing with numerous projects and developments, similar to what's taking place with Solana's ecosystem or Avalanche's ecosystem or ICP's ecosystem, with projects being built on it, similar to what happened during Ethereum's biggest bull run, the last few bull run cycles, where all these projects were being built on Ethereum, and that gave use case for Ethereum. The XRP Ledger is one of those projects where all these companies are coming to build on it, whether it be central banks or whether it be companies within the crypto space. A lot of people are overlooking the XRP Ledger. So the only thing that's left for Ripple as a company in terms of what's holding it back right now in the case of the law is how XRP was sold to institutional investors as securities. But that doesn't mean XRP is a security. And so Ripple CEO Brad Garlinghouse publicly announced the company's intent to support pro-crypto candidates during the 2024 United States election season. The company is among a group to have pledged a total of $78 million to support the Fair Shake Political Action Committee. So Fair Shake announced that prominent industry firms and players had contributed to a significant war chest to back candidates who support American crypto blockchain innovation and responsible regulation in the upcoming 2024 elections. And the list of contributors include Coinbase's CEO Brian Armstrong, Tyler and Cameron Winklevoss, Circle, Coinbase, Kraken, Messari, and Anderson Horowitz. And so Garlinghouse, he went on Twitter to condemn regulatory overreach in the country and said Ripple would be leading the charge with other industry leaders to support candidates lobbying for complementary regulation of the industry in 2024. So Brad is definitely the people's champion in the eyes of crypto, because the win for Ripple was the win for the industry. And, everyone in the industry, loves Brad for what he's doing because he's standing up for the industry. So that will attract a lot of money to Ripple as a company. When they IPO, he said they would IPO if they won the lawsuit. So maybe they're just waiting for the settlement to come live, then they IPO. We'll see. We'll let you guys know on the channel. But that would draw a lot more money into Ripple as a company and XRP too. And BlackRock is drawing money in the industry with the buy the rumor, the sell the news event that could be taking place. I'll be explaining a little bit on what that could be, because BlackRock proposed the spot Bitcoin ETF was christened with the ticker IBIT according to the amended S1 filing on Monday, yesterday, with the Securities and Exchange Commission. And so the updated filing also included new language about the creation and redemption mechanism to be employed by the fund, a topic of recent meetings between BlackRock and SEC officials. The latest update appeared to nod towards a so-called cash redemption model the analysts have said the SEC seems to be favoring, but it left open room for an in-kind process subject to approval from regulators. So the trust issues and redeems baskets of on a continuous basis, according to the filing. These transactions will take place in exchange for cash, subject to the in-kind regulatory approval. These transactions may also take place in exchange for Bitcoin. BlackRock has gone cash only. Bloomberg Intelligence wrote on Twitter saying that's basically a wrap. Debate over. In-kind will have to wait. It's all about getting ducks in a row over the holidays. This is a good sign for approval. Now, what would happen for a sell-off with the ETF coming, good news happening? If they get approved, well, shouldn't the markets just go up forever? Of course not. They're not going to go up forever. There has to be a correction. Something is on the horizon that a lot of people aren't seeing because they're too blinded by Bonk, by Solana, by Avalanche, by Bitcoin's rally, by the ETFs, by this awesome news happening, which is great. I'm excited. I'm fired up. Sometimes you get so excited that you got to change your shorts, okay? So if you had to pause this video and go put some new shorts on, get some shorts on, this right here might make you need to change your shorts again, because this is on the other scale of things. I like to look at the negative side of things, that is the fear that could be coming to the markets, because we're at greed. People are greedy. They're excited, okay? But fear is on the horizon. What is the fear, and how do you prepare for it? I look at fear as, okay, how can I prepare? What can I expect? What's the most likely thing to happen next? And this is it. The long-awaited U.S. recession will finally arrive, but when will it happen? Will it happen around the same time as the spot Bitcoin ETFs? Will it happen after? The U.S. economy will finally succumb to a recession in the first half of the year, according to Van Eck. Economic momentum has been slowing for months, and inflation has cooled along with it, creating an economy that's more vulnerable to shocks. So U.S. leading indicators are now in recession territory after 19 months of consecutive declines, which is close to a record. Shares of retailers are struggling. Certain commodities are weak. other than like crypto, employment is softening, corporate bankruptcy filings are back to early COVID levels, and the yield curve is inverted but steepening in recent weeks. All are very late cycle dynamics of soft landing mentions by the Fed in the media as well have spiked as they often do before an official recession is called. Bitcoin has only experienced one official US recession from January to April of 2020, during which it fell 60% peak to trough before rallying sharply once the Fed provided sufficient liquidity. So, key sign right here is what happens to cause a sell-off? Well, it's the Fed making a shift. It's the 2-year to 10-year inverted yield curve inversion spiking up. And then what causes the rally out of that? What causes the recovery, right? So it's obviously a lot of other things that causes the dip, but what causes a recovery? It's the Fed stepping back in. It's the Fed stepping back in to stimulate because they have to. Because in 1970, they took the dollar off the gold standard. They issued quantitative easing. There was dollar being backed by debt, credit cards. And so they created a model that will forever devalue and debasement the dollar, so it's impossible for them to get out of it. That's why we're in $33 trillion of gross debt. That's projected to grow to $50 trillion by 2030. And so that's why investors are running over to riskier assets like crypto, stock market, precious metals, commodities, whatever it may be, because the dollar is going to keep going down in spending power on a macro, whereas on the macro, crypto is going to do well. But in the micro, if you want to learn how to time these markets, these are the events you got to watch for that causes these 20 to 50% sell-offs for what I just talked about for wave number 2. Corrective wave number 2 is the recession talks. So being ready for it, this is what you got to be ready for. This is what would cause wave number 2. And so recent breakouts are confirming strong demand for hard money that is not canceled by U.S. authorities, a characteristic shared with Bitcoin as debt levels are more concerning at the sovereign than corporate or household levels. They're expecting they expect more than $2.4 billion to flow into newly approved U.S. spot Bitcoin ETFs in Q1 of 2024 to keep the Bitcoin price elevated. Notwithstanding the possibility of significant volatility, the Bitcoin price is unlikely to fall below 30K in Q1 of 2024, although that could be the support for wave number 2, depending on how high we go. So they're approximating the inflows into Bitcoin ETFs by examining the relative ratios of the SPDR gold shares, which is the gold ETF that was approved back in 2004, and adjusting it to 2023 dollars. The gold ETF launched in November 18th of 2004. It saw inflows of around $1 billion in just a few days of launch. And by the end of Q1 of 2005, around $2.26 billion was in GLD. At that date, the total physical gold supply stood around 152K in metric tons, with each ton worth around $15.6 million, which implies a total market valuation of $2.36 trillion for gold. As you guys know, gold is much higher than that. But this is what spurred the major rally in gold above $700 during the ETF approval phase. The initial dollar inflows into GLD in those first few days post-launch were around 0.04% of the total gold market. Around 1 quarter later, on March 31st of 2005, GLD reached inflows of $2.26 billion, and after accounting for supply growth and gold price changes, GLD became 0.1% of the global gold supply. So if we apply these figures to the Bitcoin spot market, we arrive at an inflow of $310 million in the first few days of Bitcoin spot ETF and $750 million within a quarter. So Bitcoin would perform well. However, that was the era of higher interest rates and a far lower money supply. In 2023, we are no longer in the dead ball era of finance, but are careening through a HGH steroid era of QE. As mentioned by the New York Federal Reserve Bank, the supply of M2 in money supply in November of 2004 was $6.4 trillion compared to $20.7 trillion in October of 2023. So as such, they're believing that it's logical to apply a ratio of 3.23x to possible inflows, bringing us to around $1 billion in the first few days of a spot Bitcoin ETF and $2.4 billion within a quarter. Extending their logic further, a more mature state of the Bitcoin ETF may approximate around 1.7% of the approximate amount of gold's total supply held in gold ETFs. Of the total market, spot market for Bitcoin, this initial sum stands at around $12.5 billion. as we assume that Bitcoin is taking significant market shares from gold among the hard money crowd. I expect 2024 to be a peak year of voter understanding of, debt-driven money printing. So they're applying their 3.23x multiple based on M2 outstanding to arrive at a medium-term estimate of $40.4 billion inflows over the first 2 years of trading. So lastly, they're noting that Coinbase charges retail traders all-in transaction fees of 2.5%, and they believe that spot Bitcoin ETFs will likely trade at 10 BPS spreads with zero commissions at many brokerages. When was the last time a 10x cost reduction didn't catalyze much higher penetration for new tech? So I know that might be confusing and that's a lot to take in there, but here's a major key to pay attention to, because this is out of control, guys. And the citizens of America, they're being forced to become market speculators. And historically, some portion of the population was drawn to the idea of wagering capital to drive a return on their investment, yet a majority of individuals chose to refrain from this activity and merely save their money. So to understand this phenomenon, what's going on right here, and how this relates to you, is we first got to identify a key structural change that happened in the 1970s. The United States, they went off the gold standard. Nixon took the dollar off the gold standard. The government became addicted to running an ever-increasing deficit, and the national debt ballooned to over 33 trillion right now. This chart that you can see on the screen right here is eye-opening, because as the national debt became larger, the US government realized that they had a more robust ability to devalue the currency. So they theoretically could pay off a fixed debt amount with future devalued dollars. And basically, they print their way out of their own problems, which doesn't solve the problem. It just extends the deadline of having to pay off from a consequence, right? So you can see a rapid decline in the purchasing power that began in the start of the 1970s. So your dollar says the same thing on it, but when you go to a grocery store, it purchases less food. So the price of food goes up, the value of your dollar goes down, and yet taxes increase, and you're not making more at your job. That's why the middle class is getting eroded and eradicated, and the rich get richer and the poor get poorer, because they're subscribing to the channel and they're liking videos like this to educate themselves. So while the devaluation of the dollar allows for debt to be paid off at advantageous terms later on, even though it is unlikely that the US will ever pay off their debt, the largest negative repercussion from this decision is the erosion of your savings value in your savings account. That's why savers are losers. And the majority of citizens were holding cash in the bank, their bank account, trying to save their way to wealth. Yet the government was destroying the value simultaneously, and they didn't understand it. So they thought, penny saved is a penny earned. No, a penny saved is bare minimum 2% of a penny lost every year, guaranteed by what Jerome Powell said of a persistent 2% inflation rate. So penny saved is not a penny earned. Only idiots believe that. The devaluation forced more people to seek paths to protect their wealth. Investment assets like stocks became a popular option because the belief has been that the stock market will outgrow any inflation implemented by the government. So the stock market wasn't really designed to make money. The stock market was designed to preserve your income, because as the value of inflation happens, devaluing your dollar, the stock market is supposed to offset that. So you're not losing money. You're just kind of maintaining or maybe gaining a little bit year on year. So how significant was this trend? So within 30 years, more than 50% of all US citizens own stocks directly or indirectly. Last year, the percentage of US citizens holding stocks hit an all-time high of around 60%, and the rise from 53% stock ownership back in 2019 to 58% by 2022, it's largely driven by the mania ushered in from zero interest rates and trillions of dollars in quantitative easing. And then couple that with like short squeezes like GME, and you see these massive pumps in tech stocks. People are putting money into tech stocks like the big seven, right? Tesla, Microsoft, Google, and the other big tech companies. So this problem's not going away. The national debt chart looks like an exponential growth chart in a Series A startup that would show investors to elicit their next mega round of funding to bring capital in, right? Up to the right, no end in sight. We're bullish. Everyone's greedy, but that's obviously one of the worst times to invest in the market. So that's basically what's happening, because this runaway debt means the United States has no choice but to continue devaluing the US dollar. As they devalue the dollar, more people will seek investment assets like stocks, real estate, gold, or Bitcoin and crypto and altcoins to protect their wealth. So we should see ownership of these assets, especially stocks, crypto, hit new all-time highs over the course of the next decade. At the same time, more capital investors, that are flooding into the public stock market. The number of public companies has been declining at an alarming rate. The folks at Blue Trust, they write that in 1996, the number of listed companies in the U.S. peaked at 8,090, but as Q1 of 2023, it had fallen to 4,572. So almost half. It'll probably fall to half here soon. So a drop of 43%. This dramatic decrease in public companies occurred in spite of growth in the economy, market expansion, and new industries and technologies. Why is that happening? Well, it's simple. Survival of the fittest, right? The companies that absorb the majority of the income, they just do things good as a company. They make the right move, like Amazon, right? They're absorbing all these companies. Tesla, they're taking over the car industry. Google, they're taking over. Microsoft's taking over. And so these companies that take over, they hold up the stock market, whereas that's why 95 to 90, arguably 99% of businesses fail within the first 5 years. Same thing is why regional banks get congregated to, much larger banks. And so the banks have decreased as well too, because that's what just happens over time. And more capital chasing fewer companies, all this happening while the dollar, which stock prices are denominated in, continue to become less valued over the long term. So this is what's driving the stock market up forever. That's why the stock market, they've seen corrections 1929 to 1940. Then you saw like 2000, 2008. You saw dozens and dozens of other massive, larger 30 to 50% corrections in the stock market. Same thing you see that in crypto. You see these bear market crashes of 70 to 80% for Bitcoin. But long term, it's going up because there is an immense wealth to be built by simply buying, stocks, crypto, letting the market structure take over from there long term. And if you take this analysis to the extreme, there is also more capital chasing a finite amount of Bitcoin. So with the Bitcoin halving coming up, that's also leading the momentum in the rally. So the same macro tailwind should work in the digital cryptocurrency industry with altcoin favor as well, because interest is being shifted over to this space. So the key moral of the story here is investors are going to win. Savers are going to lose. That is the story of America for the foreseeable future. So don't get caught on the wrong side of the equation and think that, because a recession is coming and that could drop the markets and the stock market could crash like 1929 or crypto could crash. Yes, that could very well happen. But if that's scaring you to stay out of the markets and you're staying in your savings account and just saving, you're playing defense. And in sports, if you only play defense and you don't play offense, you're playing not to lose. And the teams that play not to lose always end up manifesting a loss. And so if you play to win, foot on the gas, all gas, no brakes. We back up our truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind because the spending power of the dollar is going to go down in value over time. That's a fact based on inflation, blockchain tech, distributed ledger technology, cryptocurrencies are going up in interest. That's the truth. And together, where we're going? We're going camping on the beaches, the moon as investors. So, Alex Becker posted this and I thought this was a great post. He says, just because I can or will make money in a bull market does not mean I'm good at making money, nor can I expect to do it again, in a bear market, because in a bear market, it's tough. So if you're thinking this way, if you get the chance to make a lot of money in this bull run, storing all of your money in markets, safe investments to make 4 to 5% APY off of it for life, so you can safely build long-term, consistent, actual wealth with a real business model, that's the best way to do it. And that's what we're going to show you guys how to do. So if you want to discover our top altcoin picks, get breaking news updates like this, and get early access to our financial education platform when that's released, then go to bullrunners.com, click the button on the page, put in your email address. It's free to subscribe to our newsletter. You get instant access to our Telegram group, and you get these breaking updates when they happen, because we like to give you the best information to help you prepare for the worst that's yet to come in this economy. So with that being said, I appreciate you guys for watching this video. As always, subscribe to the channel, like it if you want to see more stuff like this, and I'll see you on the next one. I'll also see you on bullrunners.com. As always, you know what to do. Stay bullish.